morning, all of you. This is Swati. We'll start today's morning conference call via first technicals and derivatives followed by fundamentals. Today, looking towards the Asian markets, I believe our Nifty is likely to open with the gap up by almost 90 to 100 points on upside. It means Nifty will open at around 17,600 levels. Going ahead, once it manages to open with the gap up, the pullback rally is likely to be continued if it takes 17,640 levels. That will be the first resistance zone for the Nifty. If it's cleared that level, then 17,700, 17,770 will be the next level we can uh, watch it. Whereas on the downside, the first support will be placed at around 15,500 level. Any move below that level on the closing basis will again witness to some sort of a profit booking, which might take a Nifty towards 14,420 to 14,300 levels on the downside. The overall view will remain cautious itself. Small pullbacks rallies can be seen into the market, but overall the view will remain cautious as long as Nifty trades below 17,800 levels. Any more about that level only, we can witness some fresh buying into the Nifty.
Bloomberg area.
Coming towards the bank Nifty, for today intraday purpose, the support is placed at 17,550. Any more below that level, 17,470 levels can be seen. Whereas on high side, 17,750, 17,840 are the crucial resistance for the Nifty Finance. Coming towards the Bank Nifty, 39,300 will be the first resistance zone. Any more above that level, we are likely to witness some positive momentum into the Bank Nifty, which might take it level towards 39,650 to 39,800 levels. Where on high side, 38,700, 38,500 are the important support level. We need to keep eye on it. As I said, the view will remain a cautious itself as long as Nifty Bank Nifty trades below the mentioned resistance level. If it's clear that level, then only we can initiate fresh long positions. But as of now, it's definitely a stock specific market. One should keep stocks on a buy side, but with the strict stop losses. I think that's it from my end. I request Niro to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, I believe the markets have done a good expiry. The expiry from the open interest is, average. Overall, when you see, the stock specific and the Nifty expiry, the expiries have been, average, which does mean, the previous trend of the last month should continue. Looking at the overall open interest with which we are starting this expiry, it's, as about 1 crore 10 lakh shares odd, and that is average for the last 6 months as well. So again, everything here indicates that we might witness some bullish momentum going forward. The PCR is starting at 0.9 odd, again, which is below 1. So that is again a positive. The only real thing here is the VIX. The VIX continues to remain high, and with this VIX, the moves like yesterday can keep coming in, but the underlying market continues to remain positive. But if the VIX goes about 20 odd levels, that is when and Nifty breaks below 17,500. So this combination is bad for the markets, and then Nifty can probably go down towards 17,300, 17,250 odd levels on the downside. So most likely, these are the levels to watch out for this particular 4-5 days at least. So look out for the same. FIs continue to remain buyers, which is a positive. From the stock specific front, BHAL witnessed a price and OI breakout, and it is likely to witness further buying. Going forward, REC continues to remain bullish after the split. Good open interest has been built in. We continue to remain bullish on the banking sector, where banking looks like it will lead. Good amount of open interest has been built in, and the momentum should continue. So that is about it. I'd like to ask the fundamental team to take over, please.
Good morning. So continuing with Swati,
On the domestic market front, we are set to open in positive zone, tracking global cues. The US stocks rallied overnight, and also Asian markets are trading higher today. Today, the eyes will be on US Fed Chair Jerome Powell's speech, which is due later in the evening at Jackson Hole. So that will set the course for markets for next week. Coming to domestic news, RBI's quarterly statistics have come out, and where they have said that banking credit offtake for the quarter ended June is at 14% growth. This is the highest quarterly growth since December 2016 quarter. This double-digit growth is a proof that the revival in capex as well as retail consumption is on strong footing. This is the second quarter in a row where we have seen double-digit growth. Many PSU and mid-cap banks, mid-cap private banks, we have seen have become more aggressive in growing their balance sheets, which they were not since many years because of asset quality issues. Now, since the asset quality issues are behind, they are becoming aggressive. So this is positive for the banking sector as a whole. In other news, on Nelco, which is a Tata Group company in satellite communications, which provides these services for enterprises and aviation, in-flight connectivity, and maritime sectors. Now, what has happened is an international company, Intelsat, which is an operator of one of the world's largest integrated satellite network and provider of in-flight connectivity, it has announced the beginning of in-flight connectivity services in Indian skies through an agreement with Nelco. So Intelsat's airline partners will now be able to use internet on domestic and international aircrafts flying to or from Indian airport, as well as aircrafts flying over India. So in future, this agreement can also be extended to serve India's domestic airlines. So this is positive for Nelco. And there will be one IPO which will be opening today, Sirma SGS Technology. We had given a neutral rating, although the stock is expected to open slightly above the price band of 209 to 220. Stock is expected to open at around 275 rupees. The total issue size was 840 crores, and offer for sale was hardly 74 crores, and majorly was fresh issue of 766 crores. It's a contract manufacturing company similar to Amber and Dixon, and it is targeting mainly industries of industrial goods, automotive, consumer products, healthcare, IT, and railways. And the main products, if we see, it makes PCB, which is printed circuit boards, motherboards, RFID tags, SSD, and USB drives. The main positive for the company is that it has a strong industry tailwind where manufacturing outsourcing industry itself is growing at 25% CAGR. But on the negative side, the growth of the company has been patchy. In FY20 and 21, growth was in single digits, but in FY22, growth accelerated to 43%. In recent interviews, management has indicated that growth will be at least in line with industry. So if we assume growth of 25% going forward, then the stock is trading at 35 times FY24, which is somewhat in line with peers like Amber and PG Electroplast. So at 275 rupees, it would be kind of fairly valued. But going forward, if the management guides for gives stronger guidance of growth more than 30% odd, then probably there would be some upside to this price. So that's it from my side. Thank you.
Yeah. Apart from this, Dr. Reddy has said that they got EIR for their one of the plant, that is Srikakulam, wherein the US FDA has carried out audit, and EIR means the plant is out of any Form 483, and it's a normal operation which can continue at that plant and can get product approval from that plant. So overall seems positive for Dr. Reddy. Then even Gland Pharma, that has also plant got audited for specifically for one product, And there again, company has got one observation on their plant, which is not related to any data, and company said that they will be able to resolve that query, and as such seems positive for the Glen Pharma as well. Glen Pharma had seen a decline in their prices substantially from the peak, mainly on account of shortage of injectables, which which they deliver to most of the large pharma companies. Glen Pharma is a purely injectable plant, and the key concern was that the vial and the syringe, they are facing a lot of shortages in the world, and because of that, the performance of the Gland Pharma got impacted. In the last call, management has guided that they are looking at revival from the what has been seen in the first quarter. First quarter was very bad in the numbers, and they will be coming to more of a normal situation in third or fourth quarter. So it's a quality company and purely focused on injectable, which is high-end margin and less competition company sector, and looks positive from here. The decline can be used for accumulation of the stock from a long-term perspective. Apart from that, we are seeing consistently noise about Adani in papers. Today again it has come in Business Standard, wherein they had given reference of S&P that the Adani Group is in high debt. Yesterday it was carried by ET Now, and before that Bloomberg, and before that it was more of a reference of which was giving. So we are hearing noise from different part on a daily basis. So one need to be very careful in Adani shares in near term. So I'll hand it over to any other thing, or should we hand it over to a commodity team?
Commodity team can take over.
Yeah.
Thank you very much, sir. Good morning, everyone. As we saw yesterday, gold prices testing 51,800 resistance zone and correcting a bit. Today, we might see a further profit taking till 51,450, 51,500, whereby again it can be bought. Though 51,800 seems to be a resistance for now, so profit taking is recommended in the trade. Silver also looks good. Silver one can buy with a stop loss of 50 below 55,000. So prices can test 56, 200, 300 on higher end. So silver also looks attractive. Also, it is pacing up with the metals space. So similarly, copper also looks good. If sustains above 680, one can initiate a buy with a stop loss of 676. So prices can test 687, 690 levels on higher end. So buying on dips is recommended on in copper. Zinc also prices are expected to test 320, 324 level on higher end. So buying is recommended in zinc also with a stop loss below 317. Aluminum also, though it is a bit laggard, but buying is recommended with a stop loss of 211. Prices can test 215, 16 levels on higher end. Crude we saw yesterday resisting 7,600, and prices are correcting. So today also, if any pullback till 75.20, 75.30, one can initiate a sell with a stop loss of 7,600. Prices can test 7,400, 73.30 on lower end. However, it can be bought from 73,300 also. So buying in crude is recommended at lower level but though at present selling on rise 75.20 is recommended. Natural gas prices are expected to edge higher, though it is opened up a gap up, but one should initiate a buy around 750 levels with a stop loss below 740. Prices can test 770, 775 on higher end. That's it from me. Ria can take over for the currency views.
Good morning, everyone. So, on the currency front, U.S. central bankers have already started giving statements in the Jackson Hole Symposium. So far, St. Louis Fed Chief James Bullard has said that the Fed needs to act quickly and lift the policy benchmark to 3.7% to 4% by the year end. Now, according to the statement, right now the Fed rate is around 2.33. They are stating that it is not high enough to tackle the inflation and will need a tighter policy in order to get the inflation and the demand down. So, hawkish statements coming from the Fed. We are seeing dollar index stabilizing above 108. It has not retreated from highs of 108 and beyond. So, it is remaining stable at the higher levels. For the Indian central bank intervention has supported the currency, and I think whenever there is a bank intervention into the Indian rupee, it will be an opportunity to buy dips into the pair, because though there is inflow into the stocks and there is a hawkish rate hike by the RBI, rupee is right now consolidating rather than appreciating. So this is also indicating the pressure that is coming from the Federal Reserve, who members who are again and again reinstating their objective of containing the inflation through tighter monetary policy. Also, the economic activity right now is quite sluggish, and this could in future elevate the inflation numbers. We are already facing the situation where we might import wheat itself. So this will further put pressure into the already widening trade deficit. So I think 80 levels is where most of the intervention is coming, but going forward, as the dollar index strengthens more, I think RBI will let the rupee depreciate and just control the volatility. For the euro and pound, there is a lot of a negative factor right now, and I think after the eurozone saw the Tuesday's PMI numbers, it has again turned its sentiment towards bearish. So I think weakness will continue into the euro, because the weakness is coming more of with respect to the energy crisis that is going on into the eurozone, rather than whatever the action is taken by the Fed. So unless that thing is resolved, euro weakness will continue, and the range that it will maintain is 1 to 0.95 against the dollar. For pound, the outlook remains bearish, and it could uh, trade on a weaker note, much more steeper than the euro. So all in all, in today's session, we have seen rupee opening for the 28th September contract at a weaker note of around 80.09. I think if there is any dips around 80, 79, 98, it should be an opportunity to go long into the pair. It could test 80.25 on the higher side. For the other domestic pairs, for JPY INR, it has open with a gap down, and I think 858, if it trades above 58.85, one could go long for the target of 59 with stop loss at 58.68. For GBP INR, it is seeing a volatile open, and I think one should wait for the pair to stabilize a bit. One could go long above the level of 95, but if it gives a breakdown to 94.77, that could be a opportunity to go short into the pair. So look for the breakout of the range of 95 to 94.77 in order to take a call into the GBP INR. So that's all on the currency front. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.